Hello and welcome, everybody. Another quarter has passed, and I'm pleased to be here to again discuss NSN's financial results and other topics. So, Rajiv, let me jump right to my first question. So, when we gave our guidance for the third quarter, it was actually pretty grim, but it looks like we finished just sneaking over the break-even line. So, give us your view of what happened.
Well, Barry, we always knew that it would be a tough quarter. When we gave our guidance in July, we said that we expected non-IFRS operating profit in the range of minus 3% to zero. Around the middle of the quarter, things started to look even more concerning. And quite frankly, I was worried that we might even miss our already low guidance figures. So at that time, we slammed on the brakes on the cost side and asked the sales teams to push as hard as they possibly could. And I have to say, people really delivered in a way that shows just what we can do as a company when we focus. We ended the quarter with sales of 3.4 billion euro, which is at the high end of our guidance range, and an operating profit just slightly better than break even. All in all, a remarkable comeback based on some extraordinary efforts by people across the company.
So clearly that's a pretty small profit, but a lot better than the big operative loss we had last year of 111 million euros. So are you pleased by that?
The real answer is both yes and no. I'm definitely pleased that we were slightly ahead of our guidance and that we avoided an operative loss. We now have delivered operating profits in 7 of the last 8 quarters and sales growth in the last 5 consecutive quarters. That performance surely helps with our credibility. And even more importantly, it's created the foundation on which we can further build our turnaround. But even as we thank people for that performance, we have to ask for more. Much more. When you look at our net profits and cash generation, we are still very far from where we need to be.
And what about sales growth? The headline year-on-year growth rate is 16%, but a lot of that came from Motorola. I guess without Motorola, growth was about 3%, which is a lot smaller than previous quarters. So what's going on there?
I believe you only have to look at the headlines about today's economic situation. We're facing a very tough macroeconomic environment, which is creating challenges for our customers. Our customers have the twin pressure of declining EBITDA margins and lack of revenue growth. You can see them responding by cutting their capital expenditures and taking a pretty conservative approach to spending. So the change from the first half of the year has been quite dramatic. We have a weaker order backlog. In the first half, we saw pretty robust growth in our market, but it does not appear to have been a long investment cycle. And unfortunately, that cycle has come to a screeching halt. And we clearly need to understand that, adapt to it, and figure out how to respond.
And so what does that mean for the rest of the year?
I believe it will only get harder. Nokia published guidance for us today in a range of 3.7 billion to 4 billion euro and operating profit from 1 to 4%. If we want to show continued year-on-year performance improvements, we need to deliver absolutely at the very high end of those ranges. Last year, our Q4 sales were just under 4 billion euros with an operating profit of 3.9%. In Q4 '09, our sales were 3.6 billion euro with an operating profit of 5.7%. So with all the hard work we have done over the past year, I would hate for us to show a fourth quarter that basically shows no real progress in terms of our results and could potentially be the worst Q4 ever for NSN. We have to be careful that we don't make the downturn in the overall market a self-fulfilling prophecy for our own results. Talking ourselves into a hole is never a good plan. We have shown that we can grow both sales and profits in declining markets, and that's exactly what we need to strive for going forward. I believe, Barry, we have pretty tough people here at NSN, people who can and do make good things happen. There are a lot of areas where we can make real improvements, even in the short term. Tougher contract management, hard-nosed negotiations, exit or renegotiate bad contracts, elimination of the cost of poor quality, selling more software and good margin services like planning and optimization, continued reduction in our products and services cost. These are just a few examples. We need to get tougher when times are tougher. In fact, we need to get way tougher.
So understood. So let's turn back to the third quarter for a minute and starting with the regions. What would you highlight in terms of regional performance?
I'd have to focus on the ongoing superb performance of Japan, which continued its incredibly good run of performance. Ozu-san and the team continue to do very, very good work that benefits everyone in the company. At the same time, they're not the only ones. I'd like to highlight Latin America, which was the other region outside of Japan to exceed STP targets for both sales and gross margin. Eduardo and the entire Latin American organization have really built up some great momentum. I believe they're showing terrific innovation in how they sell. You just have to learn from and admire the America Mobile CBT for how they upsell capacity and software. Very impressive. I've seen it. You've seen it. We've all seen it. The India team, they achieved their highest ever gross margin quality in an increasingly tough and declining market. While the results have yet to improve substantially, I'm also convinced that both Africa and the Middle East are taking the right steps to focus their efforts on priority customers, countries, and portfolio. The road ahead for them in particular is not an easy one in both of these regions, and they both teams, both leaders there, deserve our full support as they work to make some fundamental changes. They really must focus on execution of their new strategies, as it will help the company reduce its cash burn and strengthen operating profit. These two regions represent our strongest market levers to improve our business globally. If you look at our priority countries, we continue to deliver strong results with a combined growth rate of around 39%. But we're also seeing the impact of the economic environment in those countries. India continues to face a contracting market, a shrinking market really, and North America without Motorola clearly struggling.
And on the business unit side, it really looks like services had an excellent quarter.
Yes, services was really, the only growth driver this quarter, with all 4 business lines contributing and a small improvement in gross margins in terms of quality. We need more of both. And after a tough quarter for sales for both NWS and BSO, we really need to get back on track there, particularly in NWS.
Now, let's round out the financials. When you look at the all-important cash and net profits, how do we do there?
The picture there is extremely disappointing and extremely worrying, particularly on cash. Collecting cash from our customers has been a consistent problem over the years at NSN, and despite lots of effort, the outcome isn't there. We have not made nearly enough progress. In fact, pathetic is the word that comes to mind. During Q3, our overdue receivables, money that is more than 30 days late from our customers, actually rose by 100 million euros to 758 million euro. Overall, our operating cash flow was negative and contributed to free cash flow that was negative by 101 million euro. This is something that just has got to improve. We really need that cash. Our inventories increased by 120 million euro in one quarter in a deteriorating market. Anybody who knows anything about finance knows that that's a huge red flag. On top of this, we have a lot of trapped cash in overall account receivables. Then, in terms of net profits, a figure that includes taxes, purchase price allocation, interest, and all the other special and one-off charges, we recorded a loss of 178 million euros. Now, these two numbers really show that for all the progress we have made in the last 18 months, and there really has been a lot of progress, we still have lots and lots of hard work in front of us. The sense of urgency in the company around generating free cash flow and improving profits through better gross margins and by cutting costs needs to be much, much greater from here on.
Absolutely. It's amazing how much trapped cash is out there and how badly we need it. So let's turn to some other issues. 1 billion euros in new capital from our parent companies, an independent chairman. That seems like some pretty positive news.
Yes, it is. It really is. Having a new chairman is an excellent step on our path to independence. And for all of those people who've questioned whether our parent companies really support us, what can I say other than money talks, right? Their commitment is clearly more than just words. That said, while we certainly appreciate the support of our parents, listen to this, we cannot expect that any more funds will ever be forthcoming from them. The bank is closed. So we're truly on our own and have to be 100% self-sufficient.
Now, I know that a lot of people are expecting us to announce more about our transformation and steps that will help us achieve some of our goals going forward. So where are we on that?
I know there's a lot of anticipation out there for this announcement, but I will repeat what I said in my blog. Please wait. We are looking at some very serious actions, and we need to take the time and go through the proper reviews to get things right. Our people, you all, need to be focused on Q4.
So we're coming to the end of our time here. What else would you like to add?
A couple of things. First, I'd like to just thank our people again. It's a tough and bruising market out there at the moment, and over the last few months, we've asked a great deal of all of you. You delivered in Q3 by way of a comeback, and I know in my gut that you'll deliver in Q4. But to finish, Barry, I have a question for you. Why didn't you tell everybody what happened to your hair?
So you will recall that in the second quarter video, I said that if we did better than break even in the quarter, I would shave my head. Now, to be honest, when I looked at our guidance and I looked at the overall market conditions, I actually thought I was pretty safe. And I thought getting into positive territory in the third quarter seemed like such a stretch that it just didn't seem realistic that it would happen. And that's certainly what I told my wife.
Well, an operating loss in the third quarter would certainly have been ugly. But I've got to say, Barry, that all of us respect and admire you for keeping your word and keeping your commitment.
Yeah, well, remind me never, ever, ever to underestimate the people of NSN, because look how it ends up.
Yeah, Barry, that's a mistake for sure. But you know what? Let's hope to see that same passion, same commitment, and results from everyone in the fourth quarter.
Absolutely agree. So, Rajiv, thanks for speaking with us today, and thanks to all of you for watching.